Stay informed on earnings trends and analysis in Zacks Earnings Outlook.
You know, the coronavirus is pulling investors' attention away from earnings season somewhat, but not the attention of our research director, Shiraz Mian.
Sure.
He's here with me now, and he's been looking at this data ever since earnings season began, right? So for Q4, that's what we're in right now. The data shows that more than 70% of companies that have reported so far have beaten analyst expectations. But because they're starting from a lower bar, are they beating them by smaller margins?
Earlier on, the EPS surprise was smaller relative to other recent periods, but it has caught up with the historical trends. So yes, beating above 70%, and the beats percentages are about in line with historical periods.
So will earnings beats then lend a little more credibility to the record high stock market, maybe act as a catalyst for it to move higher?
I don't think so, Terry. The number one, the EPS beats percentage, as high as it looks, the 70+ percentage, is actually below what we have seen for these companies relative to the recent past. So it's not really an outsized beats proportion. Secondly, the EPS beats are not as material to stock prices. Misses are. If you miss EPS estimate, that's a big deal. In my judgment, revenue beats is a bigger deal, and then positive guidance, so beating on guidance is a lot bigger thing. So I think it's immaterial to where stocks are. It's overall positive that the earnings picture coming out of these results has been favorable and positive, and that's beneficial to where stock prices are.
All right, well, if this virus business pressures the global economy, as it almost surely will, how long before we see it affecting earnings of the multinational corporations?
That's the big question right now. So we don't know when we all, but particularly China, will have its arms around the problem. It will be negative. We have heard from a number of these major companies, Starbucks, Apple, many others, shutting down their facilities in the country. So estimates will come down. My sense is that once we get to the end of February, assuming over the next couple of weeks, we get a better handle on the outbreak. By the end of February, early March, we should have a better grasp of what impact on earnings it has been. Towards the end of March, many of these companies will enter this pre-announcement period, and many of these companies will provide us updated guidance too about their performance, Q1 performance, and that should be a better gauge of that too. So in the coming weeks, we should hear more.
All right, run down that scorecard for us.
Okay, so I have this slide. As you could see here, we have 228 companies have reported. This includes the Cisco report, the distributor that reported this morning. Earnings are down 0.5%, revenues are up 2.3%. This is for just these 228 companies. 71.4% are beating EPS estimates. That's your upward of 70% EPS beats percentage. 67% are beating revenue estimates. As I mentioned in the second bullet point, this is an improved performance relative to what we have seen from this same group of 228. In this slide, I'm putting the results from this 228 sample of companies relative to what we have seen from the same companies in the past. And as you could see, the 71.4% EPS beat is actually lower than what we have historically been seeing that's the left-hand side chart. The right-hand side chart is showing the revenue beats percentage, and 67% is about in line, a tad bit higher than the 12-quarter average, which is 66.1%, but higher than the last few quarters. And growth isn't really, there's not much growth in Q4. There wasn't much growth in the first 3 quarters of the year either. But we have provided here a comparison of Q4 earnings, that's the left-hand side chart, in Q4 revenue on the right side relative to what we saw in the last few quarters. And it's modestly better. The growth picture is relative to the first 3 quarters of the year.
You mentioned revenue. Is that revenue momentum still holding?
Yes. So I have this chart, Terry, which shows the revenue picture for Q4. And I'm not taking a much longer history here. I'm just comparing to the first 3 quarters of 2019.
Okay.
And as you could see, particularly on the right-hand side chart, which is showing the revenue beats percentage, 67% are beating revenue estimates. The first 3 quarters were significantly below that level. The growth rate, it doesn't really show as clear of a momentum trend as we saw earlier, but it's still better than what we saw in the preceding quarter. I just want to share one other slide here. And in here I'm showing the revenue momentum for the tech sector.
Okay.
And tech is a big deal because it's the biggest earnings contributor for the S&P 500 as a whole. Almost a quarter of total earnings come from tech. So here you could see both in terms of growth rate, revenue growth rate, and the revenue beats percentage, there's a clear momentum in Q4 results from the tech sector. So overall, the revenue picture is better relative to what we expected ahead of the start of this earnings season, and I think that's the more notable positive and favorable takeaway from the results thus far.
So tech is a standout.
Yes.
What are some of the others?
So let me spend a little time on tech. We saw a diversity of strength from a variety of companies. So Facebook, Google is coming out this week.
Yep.
Facebook, even though its results were a bit on the soft side relative to what the market was expecting, the top line growth was impressive. Apple and Microsoft really, really impressed. Even Intel, which in many estimations has been a has-been. It's not really been in the vanguard for the sector, came out with good numbers and guided higher. Earlier we had good numbers from finance. I think the home builder numbers were very good. In recent days, the utility sector has been coming out with good numbers. So all in all, a pretty positive showing.
All right, what about the corporate guidance picture? How's that looking so far?
Favorable. So up through the middle of last week, I was seeing this modest uptick in estimate revisions for the current period, meaning the quarter of 2020. That trend has reversed, so estimates for the first quarter have started coming down. But on the whole, the tone and substance of guidance remains favorable. Estimates, even though they are coming down for the current quarter, they're not coming down as much as we have historically been used to.
Against that backdrop, while the outlook might be getting incrementally better, still Q4 earnings are expected to be negative, right?
Yes. So I have this chart, Terry, which takes a bigger picture. The highlighted number is for the quarter for Q4, and to your point, it is expected to be down 0.6%. When we started the earnings season, the reporting cycle, when it got underway, the expectation was for about a 3% decline.
Yeah.
So
it's better.
Less than halfway through, we're almost at the flat line. If I had to stick my neck out, I would say we will probably turn positive barely in positive territory, but nevertheless, a positive is a positive.
Yeah.
So my sense is that it'll be the flat to modestly positive in Q4, which will be a shift from what we saw in the first 3 quarters of 2019. And then the expectation for 2020 all along had been for an upgrade in the
Yes.
growth picture. And you could see that in this chart as well.
All right, we're going to hold you to that prediction.
Sure.
So the next time we talk, we'll see if the picture changes
Sure.
at all. And in between these video chats, you can always check out Shiraz's written commentaries on our website, Zacks.com. Access them right off the bottom of the homepage. By the way, get advance notice of positive earnings surprises. You know, Zacks research breakthrough now predicts with about 80% precision which stocks are going to be beating earnings expectations even before their announcements are released to the public. So to see what our research is picking now in terms of individual stocks that are going to do that, you can go to Zacks.com/promo, and there it'll tell you exactly how to access that information. With Shiraz, I'm Terry Ruffalo.